Hello traders, you're welcome back to the channel. Today we are diving into one of the most popular tools for trend following. So in this video we are going to be looking at the 100 moving average strategy. Okay, so whether you are just starting out or looking to add more power to your trading approach, this strategy could be the missing piece in your trading toolbox. Mind you, this strategy does not guarantee profits. Okay, it is effective, but it does not guarantee profit. So first things first, what is the 100 moving average? I'm just going to start by adding the 100 moving average. The 100 represents the period. Okay, so I'm adding the 100 moving average to our chart. All right, here we go. Now the 100 moving average shows the average price over the last 100 candles on any time frame you are using. So if it is the 4-hour time frame, it means the last 100 4-hour candles. If it is, that means that is going to mean the last 400 hours, because it is one candle represents 4 hours, right? So the last 100 candles means the last 400 hours on the 4-hour chart. Then on the hourly chart, it means the last 100 hours. Okay, the last 100 hours. For the daily chart, it's going to mean the last 100 days. Okay, so the 100 moving average smooths out price data, so you get a clearer picture of the trend without all the noise. Okay, now when you are using this indicator in the right way, it helps you to stay on the right side of the market. As we can see, the 100 moving average clearly shows you the direction of the trend, so you can trade in the direction of the trend. Okay, now why the 100 moving average? Why? Unlike shorter term moving averages, the 100 moving average gives a broader view, which can help us to avoid false signals and focus on the primary trend. You can see now in this example, the 100 moving average is showing us that the trend is bullish. So if you are a trend follower, you will only be looking for buy trades. You will only be looking for buy trades in this bullish trend. So we had multiple opportunities after pullbacks. We had opportunities to buy here, here, and so on. Okay, now let's get into the fun part. Using the moving average in on your chart, irrespective of the time frame that you are working on, it's very easy to spot your signals. Okay, basically, when the price is above the 100 MA, it generally indicates an uptrend. On the flip side, when the price is below the moving average, it signifies a downtrend. Pretty straightforward, right? But here's where the strategy really shines. Now, when the price touches the 100 moving average, this can act as a dynamic level of support or resistance. As we can see, in the case of a sell trend, you can see that anytime that the price touched the moving average, it tends to reverse. The price tends to reverse, okay? Because the moving average is serving as a dynamic resistance and a dynamic support. So when price is below the moving average, it serves as a dynamic resistance, in the sense that price tends to reverse after touching the moving average. Okay, so in a sell trend, you will likely be seeing the price coming to the moving average and reversing back downwards, as we can see happening throughout this period. At this point, it got close to the moving average and began to reverse back downward, because this is a sell trend. Okay, so in situations like this, you'll be looking out for sell trades. When you enter a sell, for example, let's use this as an example. You set your stop loss. If you want a tight stop loss, you can set it just above the moving average. Okay, some pips above the moving average. Then your take profit can be at the nearest support zone. Okay. On the other hand, you can also decide to use a bullish crossover for your exit signal, meaning when price cuts above the moving average, you can use that as your exit signal also. Now, in the case of a buy trade, when you enter a buy after the bullish crossover has happened, you can set your stop loss just below the moving average, okay, for a tight stop loss. Then for your take profit, you can decide to use the nearest resistance zone, or you can also wait for price to cut below the moving average as your exit signal. Okay, so this is a classic way that traders use the 100 moving average for trend continuation setups or trend reversal setup, basically for trading in the direction of the trend. Okay, all right, but what about when price breaks through the MA? Like for example, if you are in a bullish trend and then you notice that price breaks through the MA, because ideally in a bullish trend we are going to be looking for buy trades when price reverses after touching the MA, right? For example, this will be an opportunity for a buy trade. This will be another opportunity for a buy trade. This would have been another opportunity for a buy trade, but you see, in this case, the price broke below the moving average, even in this case as well. So what if something like this happens? Now, when you have price breaking, using the bullish trend as an example, when you have price breaking below the moving average, it signifies a potential reversal. Okay, it's just that before you decide to trade in the direction of the apparent reversal, it's good for you to wait for a confirmation first. The confirmation could be a retest of the breakout point and then a continuation in the direction of the breakout. So in this example, we can see that the price did not continue after retesting the breakout zone. So this breakout was invalid. Now in this other example, we can see that the price did not exactly continue, because after the retest of the breakout, we can see that price just came down a bit and went up again and entered into the breakout zone. So it's a conflicting signal. So in this situation, it's better to stay away from the breakout. It's ideal that you wait for a clear breakout before you trade, right? So you can see that not long afterwards, the bullish trend actually continued. But let us look for a good example where a legit breakout happened. Okay, so we can see now in this situation, after the breakout happened, you can see that the retest was valid because the price did not exactly go through the moving average significantly. There was even 3 attempts. The first one was here, second one was here, third one was here. But eventually, the price could not enter much above the moving average. So this was a legitimate breakout, and we would have considered entering the sell after this confirmation. And the stop loss could be above the highest points of the retest, okay? The highest points of the retest. And then a take profit level could have been at the nearest support zone, as we can see here. Or you can also decide to wait for the price to begin to rise above the moving average to exit your sell trade. Then as for a buy trade, the reverse is just the case. So how do we make the most out of this strategy? One way is to use the 100 moving average with other indicators like the relative strength index or candlestick patterns. Now it's important that you watch out for candlestick patterns. For example, we had a bearish engulfing here, as you can see, and that was an additional confirmation that this breakout was valid. Okay, so you watch out for candlestick patterns because they can help you, to confirm whether a move is valid or not. Okay, and then you can also add on other indicators, just such as the RSI, just for extra confirmation. So when you have the RSI, for example, from the oversold zone trending upwards, it can signify bullish momentum. And when you have it from the oversold, from the overbought, when you have the RSI from the overbought trending downwards, it can signify sell momentum. Okay, so basically that is it for this video. That is how the 100 moving average works. When price is trading above it, it's bullish trend. When price is trading below it, it's a bearish trend. When you have a price cut above the moving average is a buy signal. When you have price cut below the moving average is a sell signal. And then it's important to watch out for candlestick patterns and then also use other indicators such as the RSI for additional confirmation. Okay, so that is it for this video. Now you have a full breakdown on how to use the 100 moving average in your trading. It's important that you start testing it out on a demo account and see how it can work for you. And if you found this video helpful, make sure to subscribe and hit the bell so you don't miss out on future videos. Thanks for watching, and I'll catch you in the next one.